Hello, 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 everyone. Happy Monday. Another week. Yay for us. So, should be interesting. Good morning, Connor. Good morning, Rams of Fall. Good morning, Christoph. Good morning, Patrick. I got to give a shout out to already the people who have joined the channel. Patrick, Gary, Connor, and Rod so far have joined. By the way, there are two membership options if you would like to support the channel on an ongoing basis. You can it's via YouTube. So please check that out. All support is appreciated. And, we're winding down ads on a number of things we will be doing. So we're just going to rely on some channel support. Thank you, everyone. All right. Hope everyone had a fantastic weekend. The last trading week before Thanksgiving week, which is notoriously bullish, but we shall see this year. Now, remember, cycles are at the top on the daily and the weekly. Two kinds of retracements for those longer term viewers, either the sideways or the pullback. Don't know what's going to happen yet. So far, it's a sideways possible overnight correction. Not much information coming out today. We got Brainerd speaking at 10:30 Central. Consumer inflation expectations at 10 Central time. Other than that, it is quiet. Stock market. Healthcare, little bounce back today. Remember, pullback on Friday, little bounce back. I went over that in the weekly sector overview. It's still playable. Healthcare is still very playable from my perspective. What else? Just pretty mixed. Mega cap, slight pullback here. Baba's actually strong today. Scanner, very, very mixed and quiet. Healthcare and real estate sectors that are up. Utilities flat. Everything else is down. Technology, some profit taking after last week's major run. Fed watch 80-20, 80 for the 50%, 24 to 75%. Remember, that's a long way off still. 14th of December. It's the 14th of November. So we have roughly one whole month before the next rate hike. Fear and greed still solidly in greed. Tyson missed on EPS, raised on went beat on revenue, was a slight gap up, but still in consolidation. That could be, if it does break out above the 50-day, check that out. It could be in for a short little run, but I would not touch it until it gets above the 50-day exponential. Other than that, very quiet. After hours today, very quiet. Tomorrow, before the open, really starts kicking it off with the all-important Krispy Kreme. Krispy Kreme bringing it to the house tomorrow. Actually, it's just, we'll take a look at Walmart and Home Depot. Just prepping in case you can't join us after the close today. So, good morning, Options 22. Good morning, Lauren. Hey, Rod, another shout out. I see you here now. Thanks for supporting the channel, becoming one of our members. So, inside day, slight gap down, but that's not surprising based off that 2-day run up. Slight gap down. So far, this would be a sideways correction. Yes, on a closing basis, it is down. On an intraday basis, it is up from the gap open. Key support coming in for me still this 39.65 area. Below there, 39.12 area. Keep in mind, even on that nice pullback to that 39.12, that would just be reconnecting with the rising rotation zone. It's going to take a lot in order for this to tip into more of a bearish mode beyond a slight pullback. As I talked about yesterday, lots of major support. Run-up levels based off this little gap down. What are you going to look for? You're going to look for first the closing area on Friday, which is 4,008. 62.5 harmonic, 4,018. And 4,034 is the next minor harmonic level. just eye, in case this tries to climb up, eye the top end of this channel. And then the overall bigger target, 40.59, and then 40.80. 40.80 might not happen until we at least get some consolidation. Daily cycles at the top, so we'll be watching for that pullback play, but not much substantially yet. Hey, AB, do you think a round trip in the cards for Tesla at 174? What do you mean round trip to where? Oh, back to 174? I think it'll go longer term lower than that, but we'll take a look at Tesla. We can check that out. Genomic stock. Nas. Let's get to the Nazies. Key support on the NASDAQ coming in right back around this 50% from the run-up. Remember, it did trigger the double. So we have probabilities favor upside continued pricing. Lots of times after doubles trigger, you do get the pullback play. Dropping this just a hair lower. Key going into this open is about 11,750, and then I'm going to about 11,592 to 11,600. Maybe just, there's a pretty decent support zone in here. The support zone that I'm going to be watching as the first level with the pullback. And as I mentioned yesterday, keep an eye. Right now we're holding the top of the 4-hour rotation zone. You break below that, you can see this first little support zone down there where I'll be targeting for pullback support. If we do break below that, still using roughly Friday's high to 11,890 to 11,900. And then my first key target is about 12,039, 12,040 to 12,059. 12,059 is the 62.5. Do keep that in mind. Checking on the spiders and the Qs. The little spidey sense here. Pullback level, I'm utilizing about 36.97. We're at 37.42 pre-market. On any rally, I'm watching for the close. There's not much in here. You see here a 4-hour clear path move. So we got to check out that 1 hour. Right now, the 396.99 first level support. That takes us into the 1 hour rotation zone, and 394.35 is a little key level. You break 394.35, I will watch for a more accelerated pullback in the spiders. There is a lot of support up in here. Beyond that, it would be the gap open, the 496 target, and then 403.78 is the next major target. On the Qs, little gap down. 285.74 is key resistance. We're at 286.48. So on the pullback, 285.75 area, and then 283.28. This is the big support zone there. Prior breakout zone becoming support. Off the open, 1 hour rotation zone right, just below that 285.75. To the upside would be the gap fill play to about 288.57, and then 290.85, and then on the next key level, remember, the Qs also triggered the double, but the next level, 290.97, do not ignore that. There's a little topping shelf right there. And then 294.34 is the 50% harmonic from the down move, but right in front of the first double target, 297.34. So, just like in the futures, watching for that pause or pullback, prepared for that. However, more medium term, we have the significant bottoming patterns triggered. And you see the final target for the Qs could take us all the way back to the 200. So keep that in mind. And look at this, the little highs from September, mid-September, before the next plunge down, right there. So if you're trying to structure some more medium-term plays, going with a continued more of a year-end rally, You got some nice targets up here to utilize. I don't have the inverse head and shoulders. You can see this is just it almost. This is shoulders. I think nearly too deep. It might still qualify. Just trade this as a double. It's going to bring in the targets. You're going to virtually need to use a flat neckline though, because where this head popped up before this. So you trade it as a double genomic stock. That you're better with those targets. Just use those targets. And look, your second target is right in front of the 62.5. So you got some really nice targets here to the upside. Hey, Waka Waka. Waka, you better join the channel and become a supporter. So you're in trouble. Hey, Lauren, George, Anissa, thank you for tuning in. Spider double top? There's no double top here unless you go down. No, it's not even on a 1 hour. This is not a double top. No double on the spiders. Sorry, Sashi. You just have your key support levels. If you do break below here, here's the level I'd watch for the bigger pullback. This support shelf, because then you're into a clear path move even on a 1 hour. And then you could get that return to the breakout level. That's the only topping trade there is right now. Let's get. I'm gonna have to start this earlier. Oh boy. Dow, your key support's coming back about 33,235 area, and then 32.9. So you have a huge support shelf on the pullback here in the Dow. Key overhead resistance. It did close above the 62.5. Unfortunately, on a down close. And I did look at that. It's not as strong as the up close. It actually weakens the probabilities. That doesn't mean it can't re-trigger that with an up close. But if it's only a down close, it does lower the probabilities slightly. The next resistance shelf, though, in the Dow I'd be paying attention to is it hasn't been able to eke out the highs from the 16th of August. 34,100, 34,120. The Russell. Next thing I'm watching, if it does break below the 200 again, about 1856 and 1839. Next target up is 1917. The DAXI still climbing, getting very overextended. Very overextended. And you see a pretty significant clear path move back to 13,950. So we got that extended clear path on the daily. We look at the 4 hour. Your 4 hour rotation zone, and you have the support shelf and the 25% harmonic 14,212, 14,211 area. But below that, you have a clear path even on the 4 hour. I'd be watching for this 13,950 area on the bigger pullback for the DAX. Notes still flagging after triggering the double bottom. Pull back just below the 50. I'm watching my key support level is 111.18.5 to about 111.04 on a pullback. The little pullback, though, we've come back straight to the first support area. So if we start getting a strong rotation up above this flag, that's a nice potential shorter term trade if you're trying to do something shorter term and not the little longer term double. The key level would be 112.11.5. Dollar index flagging the other way. So we still have, once this breaks down the dollar index, really focusing on this 105.12, 104.8, 104.90 level. A little, if it does break above the flag pattern, the little breakdown zone would be roughly the second target on that double, 107.50 area. VIXI, besides, if we do get, I'll just be watching for the potential gap fill play, and then longer term, even after we get the pullback, to complete the pattern, this return to 22, then probably return to 21. Crude, still caught in consolidation. This is a little mini double that looks like it's going to trigger right now. Mini double right here. So just curious to see where that would take us back with this lower volatility. Use the conservative targets. And see, that could only be back to even 86. So not much to do there unless you're really short-term trading it into a huge consolidation pattern right now. I know we got, let me just get to Euro. Euro's still expecting pullback move right here, but your major support is back at 101.70 area. We break below 102.75, then I'll start targeting that 101.70. Still on a breakout play, watching it to hit the reconnect with the 200 simple about 104.40. The pound, your key pullback area is 106.51. The next harmonic area is higher on the full move. Look at that. The next key harmonics in this topping area from back at the beginning of August with the harmonic and the declining 200 would use 120.41 as an intermediate level. Bitcoin bounce on the plans, would not be rushing into this. I'm going to track this little double should it trigger or confirm for patterns to watch for shorts. Other than that, would not be utilizing this as anything buy. You have that Binance, we're going to bail stuff out, which is just trying to prop stuff up. There's so much crap going on in there between inner exchanges holding each other's tokens. This is going to be fascinating. Tesla, besides the little play, gap filled then today, your targets from this little sloppy inverse head and shoulders. I would not ignore the 202.60 area with the declining 4-hour rotation zone on an upside play after the gap fill. Then your targets beyond there are 206, roughly 40, 211.73. What we also have to know what would invalidate it. At this point, you're roughly looking at about 184.29 from the harmonic retracement point of view. If you wanted to use a walk-away trend line, you're looking at somewhere below this trend line. In the short term, I'd still use that 184.29 area. Yeah, Connor, thanks for bringing that up. Option expiration coming in on Friday. And 4,000 is, I'm going to do some little more research today, but Friday is another key option expiration. Remember, the short-term option turnover is so drastic at this point, we could see the levels shift. Sterling, welcome, welcome, welcome. The 10-2s. 10-2s is rotating down. This is where I am going to, with this snapback use, I am still reusing the old harmonics. About minus 60 basis points and minus 65 basis points are the two key things. We are not on anywhere close to a steepening yet. You're welcome, Genomic Stock. Hey, Gary, thank you for joining the channel. For tomorrow, I mean, any beat from the PPI, I believe you're referring to the PPI tomorrow. You know, you've also have some producer prices that have been coming in on the ISM surveys and everything else. So I would not be surprised to see the PPI coming in a little better than expected. It won't be as big a mover, though, as the CPI. So you have core coming in. This is for tomorrow as in line with previous. PPI month over month coming in line with previous. Everything's pretty much the same. I would not be surprised to see a beat. Even if it was a miss, I doubt you'll have a huge reaction. It could then sort of trigger the sell-off move or the pullback move that we're waiting for. If it is a miss, it might be shrugged off. I would not be putting a ton of weight in there unless it was a huge I should say miss. You know what? I look to miss as something to the upside, but a miss would be coming in line. So unless it's a huge beat, which would be producer price indexes going up again above consensus, that's the only way I'd start watching for that bigger pullback based off those numbers. Good morning, Maria. Covered Tesla. Thanks for putting that out there, Sterling, for joining the channel. I will appreciate everyone's support. Again, I'm taking ads off, trying to get this more sort of, we can get some more supporters than relying on a few people to carry the load. You can do whatever suits you best, Rams of Fall. Thank you. I think it's a pretty good value even at these reduced prices to help people learn some key technical analysis. Mike is going to be rich. Not from YouTube. I'm also trying to get some more of the riffraff out of the stuff. I'm focused on comments from the people who want to support the channel. Just seeing if there's anything else that we need to go over. Platinum and gold, not surprised to see a little pullback. Copper, watch for this pullback to the peak 378 to 374 pullback. Does not invalidate anywhere close to the double. That would be a fantastic pullback entry from just trading the pattern. Thank you, Michael. So don't everybody freeze. I think everything's got to go straight to pattern. Remember, gold finished all the doubles. Now your key support, first major area is about 1741. If it does break below that, it would just be a return out of major overbought correction. I will be watching 1721. Still expecting gold to also target the 200 in the short term. Again, probabilities aren't guarantees, so you always have to manage your stops. We have still a lot going on in the world. So as options brought up yesterday, options 22, could there be a rug pull at some point? Yes. I think there could be, especially before the end of the year. Can we predict a rug pull? No. If it's going to blindside us, if we have see some information really starting to weaken, yeah. Also this week, just want to point out a couple other things. If Walmart, Home Depot release poor results, Target, Lowe's release poor results, Nvidia does, you could see some more short-term shift that would take us back to the daily cycle bottoms. So depending on your time frames, know where your trailing stops are. From the larger time frames to play some little more of this bullish move, I would give it more room on your stops. From a micro time frame, if you just played the last end of week and held it over the weekend, from an end of week breakout, I would be utilizing tighter stops and then look for a possible pullback re-entry until the long patterns are done. I do not know your time frames, your positions, your account sizes, though, so I can only give general feedback on how I look at things. Well, if you need a stock to blow out, then you shouldn't ever need anything to do anything. You might want something to happen, but if you need it to happen, you got to look at your positioning. You're welcome, Rams of Fall. Thank you, everybody, for tuning in. Just let's peek in at the S&P. Still, you're in this overnight consolidation. If you're trying to play something on the micro, it's about 39.80 right in the morning. And then you could use some harmonics off the highs. Yes, this is technically a double top that was triggered with so here's your other micro levels. We don't normally go down this small, but I'm just trying to show people. So triggered, this was a valid trigger off the gap open. Partial gap fill, already hit the first target, and now we're retesting it. So 39.79, which you could already see with support levels. But if you're looking for shorter term targets off the open, 39.73.75, 39.60, 8.50, and then we get that 39.63. That's how you can use the shorter term analysis. If you break above, let me get back to the S&P real quick. If you break above, though, about 39.95, it's the quick little, for a micro time frame, a quick little gap fill play. I'm going to leave it at that. Everyone have a fantastic trading day. Thanks for tuning in. Thanks for the channel support. I shall talk to everyone later. Bye for now.